Hey everyone, me Kevin here. In this video, I'm going to be very specific and transparent with you about two big failures. One, a failure to communicate my strategy appropriately for those of you following me on YouTube, and we're going to correctly explain my strategy for investing in real estate and stocks right now in this video. And in doing so, I'm also going to show you my portfolio, well, at least the overviews of my portfolios, so you kind of have a breakdown of where my money is, and I'll explain why. Then, I'm also going to explain how I screwed up a trade today, what I did wrong, and what I learned from screwing up that trade. So you're going to get how I failed and transparency in this video, which I always owe you and I always desire to provide to you in a clear and concise way. So let's get started. First, this is my JP Morgan account. JP Morgan, we've got $12.28 million in stocks here. I have 0 options positions in those stocks. Those stocks are things like Apple, Amazon, Etsy, Enphase, Tesla, you name it. My big main core holdings are right here. So you could write down that's $12.28 million. You could see there's cash, and then there's some liabilities, $390,000 in credit lines. I got to use some of the cash and pay off that credit line, and then I have no margin. Okay, over here, this is Webull. On Webull, you could see that I have $3 million in options, $1.22 million in stocks, $189,000 in cash, and then some miscellaneous other numbers and facts over here or whatever. But that works out to a value of, what is that, 4.2 plus 2, so somewhere around $4.4 million in that account. Okay, now let's go the other way. Here's M1 Finance. This is the day return. Looks like I lost $3,600 on the day. That is 1.061 in M1 Finance. That's just shares, no options here. And then here's Robinhood, which lost about 1.69% today. This is about 50-50 options and shares. And that's 2.144.4 million, or 2.14444. Anyway, that works out to a portfolio value in the stock market of $19.8854 million, if you add that up. So that's what's in the portfolio right now. All right, so we got that out of the way. Now what we're going to do is we're going to explain where did this money come from, and what is my strategy, and what has my strategy been, and why are some folks confused thinking I've changed my strategy. First of all, it's very important to realize that you're an idiot if you don't change your strategy when the market winds change. Now, I don't change my strategies often. In fact, a lot of my strategies recently where people are like, oh, wait, Kevin, you said don't do options. Now you're saying options. That's a misunderstanding of what's going on. I'll tell you up front here. I said, don't buy calls, sell puts, okay? That's like the same suggestion, and not financial advice. Don't sue me, bro. If you lose money, it's your fault, right? But there's been some recent confusion where people just aren't paying attention, I think, and I just want to make that very clear. But you have to modify your strategy over time. And I'm sorry if it sounds blunt to say it'd be stupid not to change your strategy, or somebody would be an idiot not to change their strategy. You've got to change your strategy. When the market gives you different opportunities, you change your strategy. I don't change my strategy that much, and you're going to see that by going through this with me. Take a look at this. So this right here is my iPad. We're going to go through this really quick. And it's worth watching because you're going to see where money comes from and how I built my wealth over this last year and 3 months here. March 6th, I did not have a whole lot of money in stocks. I had a good portfolio in stocks, but not a lot of money in stocks. And one of the ways that I made a lot of money was on March 6th, I called up my lender when the Federal Reserve dropped interest rates, and I said, refinance all of my properties, 4 now, then 4, and then other properties, refinance everything we've got as soon as possible, because I think there is going to be a massive rush of people trying to refinance their properties really quick. I was in the door closing my refinance while other people were panicking and the market was crashing. I took that money, I threw it into stocks. I did really well on all those stock purchases. Buying Redfin at $10, buying Tesla at, $350 to $400 pre-split. I mean, come on, these are huge changes. And so yeah, that was really lucky timing. That exploded my portfolio. Being able to have my real estate like a piggy bank, smashing that piggy bank, taking all the cash and dumping it into the stock market at the bottom of the market was really convenient timing. Okay? It is what it is. Yeah, a lot of money came from that, and I'm very happy about that. Okay, and hopefully you are too. But anyway, between May and August, I decided to buy real estate. And these are like my actions, okay? Look, this, hey, it did great, was the bottom of the stock market. In fact, we'll make the screen here. This was great. Bottom of the market. Refinancing here, great. Bottom of the real estate market, right here. Well, not really bottom of the market. It was just lower price then, right? Refinance, took money, threw it in the stocks. May through August, I buy 10 properties. Great. Real estate started exploding in value between September and June of this year. So September of last year and June of this year. Okay, those were lucky purchases. I did a crap load of buying last year because of all the panic and fear. In August, I started paying down my margin. That was a good decision, but I was too slow. And in September, when we had a tech sell-off, I sold a little bit more, unfortunately, in a red market to continue to pay down margin. That was not great timing. So far, really good timing here, but you're not perfect. So I did sell a little bit in September when there was pain in the market, and I wish I didn't, but I paid down margin. Between October, actually right before the election, I got to put this in. You might remember this. In fact, comment down below if you remember this. Right before the election, I went ham buying right before the election. And that's because I thought that no matter who won the election, there was so much fear that the market was going to crash if Biden got in or the market was going to crash if Trump got in. I didn't care. There was so much fear. I loaded the boat with stocks at the end of October. I bought. That was a really good decision because the stock market did really well after October. Everything did amazingly in November and December and January. In December and January, I started feeling like I had a little bit too much stock exposure again and too much margin. And so I said that I was going on a stock diet, that I would buy less stocks. Of course, I have a problem not buying stocks, and I didn't really follow my advice as well as I should have. So I'm going to put yellow there. My intention was correct. I kind of still nibbled on stocks because I have this problem where money burns a hole in my pocket and I just have to keep buying stocks. I did also buy crypto in January. On January 6th, 5th and 6th, I bought crypto. And on that day, on January 6th, I said I would probably sell crypto either March 12th or May 13th. Keep those dates in mind. Early February, I sell about $1.5 million worth of stock because I wanted to reduce margin. This was a very good idea because literally in mid-February, the stock market started falling a lot. And I went on a buying spree again. I bought the dip like crazy. February to April, buy. If anything, this is probably like a half pink and half green. I'll make the Feb pink because I bought the dip very early and the stock market kept falling. So this was like half pink, half green, where it's like half good move, half bad move. In fact, we could probably just, it'd be easier to just do kind of like buy the dip heavy, kind of make it like that, like half green, half pink, okay? Because again, the intention of buying the dip, very, very good, but the dip kept dipping, okay? It was a problem. Then on 4/20, I decided I'm very exposed on margin. I don't like it. What if the market crashes more? And so I decided to go heavy on call options for a September-October rally, and I would sell stocks to close my margin. Folks, I sold about $9 million worth of stocks. That's a lot. Now, this strategy ended up being mostly good with the exception of Tesla. Tesla has done very crappily since 4/20, and I bought a lot of options in Tesla. I didn't diversify very well with my Tesla options, and so my Tesla options are bleeding. They are hurting. It's down a chunk, okay? Now, and I try not to look because I'm sad about my Tesla options, but that's okay. My Tesla stock is up like $6 million. My Tesla options are down like 800 grand. Okay, it's a lot. Like my Tesla options are bleeding, but I'm just diamond handing them right now because I have high faith in Tesla, and they've had like 4 months of FUD. So I think that FUD is going to U-turn. So I'm being very consistent with my strategy. But I did go to calls. I went to 75% 75% shares, And then I went to 25% options. Okay, you get the idea. I don't really have to draw it out. 75% shares, 25% options. That has become a very clear strategy for me. So yeah, on 420, I shifted my strategy. I went from buying the dip with margin to buying the dip with call options, which give me a leveraged opportunity on the market as long as the market does well, right? So I did shift my strategy on 420. I also sold a bunch of crypto on 420. I did not sell on 412 like I said I would. I sold a week later on 420. Oh well, my fault, whatever. I still sold my crypto then. This I would say is mostly green because it meant I sold Bitcoin at like $55,000. Okay, had I listened to myself and sold on 412, I would have sold it at like $64,000. Anyway, then in May, and this was what I was fearful of. I was fearful that there would be another dip. Remember how I said I'm going to get rid of all my margin because what if there's a deeper dip? Well, folks, that deeper dip came, and it was May 14th to May 14th. I spent $1.5 million briefly going back into margin to load up on shares. I just bought a bunch of options on 420, so I put $1.5 million approximately into the market between the 12th and the 14th of May. Those shares are doing really well right now. Most of those stocks, things like Neo, Enphase, Etsy, whatever, you look back at March 12th to March 14th, it was literally the rock bottom of the market. And right now I have zero margin, which I'm very happy about because if the market crashes again, I could use some of my margin. Okay, good. Now, that was a very good move. Now, in June, I started nibbling on crypto. I'm going to say this is neutral because we've kind of been trading sideways. I also stopped buying calls. So in June, I started nibbling on crypto to get back into crypto. So that's going to be like my ADA position. My ADA position, I'm up on my ADA position, 88 Cardano, and I plan to keep nibbling. I'm not in a massive hurry to keep buying crypto because I think the 2022 is going to be the year of crypto. Then, in July, I decide, okay, keep this in mind. In June, I say, stop buying calls. Don't buy calls. Why would I say stop buying calls? I say that because the market is slowing. Okay, this is really important. The market is slowing down. The economy is not going to grow as fast as people think it is. So when the economy slows down and you keep buying call options, you're exposing yourself to expensive theta decay. Now, I have also closed some of my call positions that have already had what I call a euphoric rally. And that's going to be GHVI and CCIV. I sold these at $17 and about $30. Now, I plan to hold shares in GHVI and CCIV long term. And the way I'm doing that is I'm backing into these companies, these shares, by selling puts. But I want to talk about real estate as well in a moment, okay? To properly understand options, it's important to know that buying call options, which I said I don't want to do anymore, do very well when you go to the moon quickly, like when you're expecting stocks to go up quickly. Some stocks I don't expect to go to the moon quickly. And so that's why instead I'm selling puts on those. It makes sense. And if you understand options, this makes sense. I also just posted a 32-minute lecture in the Stocks and Psychology of Money group at the bottom of the curriculum, adding new lectures, which I always add new content totally for free, which you get to take advantage of if you join the programs. Link down below. Use that coupon code expiring on the 22nd. Okay, now, what about real estate? So real estate is interesting. So real estate, I've mostly, with the exception of one property that I added in the last couple months, I have 4 properties in development with architects. But beyond that, I have mostly stopped buying real estate. I actually think that real estate has some risk factors right now. I see inventory potentially backing up soon. I think that we are seeing new listings come on the market at a regular pace, but less of them are selling quickly. And that's because asking prices have gotten so ridiculous. So I've stopped buying real estate. Now, I might consider buying real estate if I come upon a deal that I think is priced improperly. So if I think something is a really good wedge deal and something is mispriced, then I will buy it. But I've mostly stopped buying real estate. Okay, now, going forward, August through December, and then I want to talk about the trading mistake. August through December, I expect all stocks to potentially grow slower than we expect them to grow. Now, I'm not closing down the call options I have because I still believe that there is going to be a period of what I call euphoria. I think each of the call options I have will at some point experience a rally between now and the end of the year. When that comes, I'm going to dump my call options and I'm going to either sell puts or I'm going to just straight up buy the shares. That's a very consistent strategy, and this is what I said I would do on 420. I said I would buy the calls, I wouldn't hold them forever. When they rally and they make me lots of money, I'll sell them and I'll buy shares. That's a plan. It's not a guarantee. It's a plan, and I still believe we could see that, especially when we see a downward inflection in inflation, which I believe the market will more broadly realize in September and October. But I do believe the market will grow more slowly between August and December. 2022 is going to have an issue because in 2022, we're going to start comparing to 2021 comps and growth rates, and I think growth at companies is actually going to potentially be negative. This is why I've called weeks ago, I started talking about this. We started talking about this 2 or 3 weeks ago, that, oh my gosh, you realize when Apple does 30% increases in iPad or iPhone or Mac sales or whatever, next year, even if the numbers are still great, like you sell, I don't know, let's just make a quick example. Let's say consistently you've been selling 5,000 iPads, okay, for whatever. You're selling 5,000 iPads. And then the next year, you're selling 10K iPads, and you've consistently been selling 5K, or you've been selling a tiny little bit more. And then the next year, you sell 9K. This is still way bigger than this, but it's actually negative growth from the prior year, right? It's really potentially bad. And I think that's going to be true for all companies, whether it's travel, retail, anything consumer related. I think, again, retail, hospitality, restaurants, travel, consumer products, Apple, Tesla, whatever. Everything I think comparing to 2021 is going to be a little soft, potentially a little bit soft. But that doesn't mean I'm going to sell out of the stock market. I'm still willing to be in tech, and I'm going to stay in tech. Because I think of the pain we might see in 2022, tech will do the best. And the reason I'm going to be in tech, or the way that I'm going to be in tech, is not with options. I want to go into 22, ideally, with no options. So in other words, in the next 6 months, I want to work to close my options. I take tendies. Some things, I don't know, we'll see how it goes, but I could change my strategy on like SoFi or CCIV. If they start running and I have a profit and I decide to close the options, then I decide to close the options. If I feel like they're going to run, then I'm going to close the options. I'm not going to sit there like a num-num and just pretend and stick my head in the sand and do nothing. If I think it's going to keep trading sideways, then I'll just keep holding it and milking the theta decay. Very clear strategy. Okay? Then I do also believe that crypto is going to do well in 2022 because we're going to have much better regulation. I don't think we're going to get ETFs until 2022. Okay, good. There you go. Now, we got to talk about my failure on AMC. I made a num-num, stupid mistake this morning, okay? It was so dumb, but I want you to learn from this, okay? So the market opened this morning, and it opened down, and it was gonna, and we started seeing it trend up, and I'm like, oh, the market's starting to trend up. The perfect thing to do at a bottom is to sell puts right here. Sell puts would be the perfect thing to do here. And I did that. I sold 3 puts, Square and a couple other companies. The problem is I was so in the mood of making decisions that I didn't logically fact check myself by saying, wait a minute, you sell puts at the bottom, which we're doing. You sell calls at a top. The time to sell calls is at a top, not at the bottom. But I was an idiot, and I accidentally sold a call on AMC at the bottom at the same time I sold my puts. That was stupid. Like, logically, I know not to do that. I screwed up. There was also a huge red flag in that when I put my sell call in for AMC, I put my sell call in for AMC. Jeez. I put my sell call in for AMC, and the order wouldn't execute. It was like the perfect red flag, like, you idiot, don't do this. I didn't listen. Emotion got a hold of me. I screwed up. And so when AMC started running, I closed my sold call. I'd lost $4,300 net, closing out the really good decisions I made with these puts and the bad decision that I made with the call, the sold call. So I lost $4,300 on a trade. So that'll be on our trade log, because I show you my losses and my wins. In fact, if you haven't seen that video yet, you could, it's a good one. Let's see here. Meet Kevin revealing about my trades. Here we go. So there we go. Watch this video if you have not seen this video yet. It's right here. Revealing the truth about my stock trades. It's right here. Meet Kevin revealing the truth about my stock trades. And it goes through the portfolio with you. All right. So those are truths and failures and reality. I'm also giving you my plan. If the plan changes, I will let you know that it's changing. Because that's what I do. I let you know and I keep you updated. But in my opinion, when I see some comments from folks going, oh my gosh, you said last week don't buy options, now you're doing options. You're misunderstanding what's going on. Like, to me, my plan, what we've done here has been a very consistent progression. A very, very consistent progression of building wealth. It made sense to buy the dip last year. It made sense to buy real estate last year. It made sense to pay down margin. It made sense to buy crypto, and it made sense to sell crypto. In my opinion now, and we won't know yet, a lot of the, see how at the top we can look back in hindsight and go, oh yeah, that was a good decision, that was a bad decision, right? But now it's uncertain. We don't know yet what's going to happen. I'm just making guesses. Your guess is really as good as mine. I just do this every day, and so I hope I'm right. That's it. If you lose money, it's your fault, right? But anyway, hopefully you appreciate this transparency. Check out the program's link down below. And folks, we'll see you in the next video. Thanks so much.